Ladies and gentlemen, welcome to the Fintech Friday show. On time, as always, with the great and powerful Tevis, fond of investing, Roy from Crossroads, the greats, and hopefully soon Steve will be here as well. But how are you guys doing?
It's been a doozy of a week.
Yeah. I feel like we had this conversation last week, but let's do it again.
Yeah. Hopefully we stop having this conversation before the end of the year. I was actually pretty surprised. A lot of the narrative regarding the sell-off was all around AI bubble, and I'm like, okay, obviously Jensen's going to counter that head on. I'm sure earnings will be very good as well. This myth goes away, and it has, but the market doesn't care. It continues to sell off, and I think it was probably just looking for an excuse. And it's like, well, we can't use this narrative anymore, but we're still going to sell. So it's harder to figure out where we bottom and why, as a result.
Tevis, crazy week. How you doing?
I'm okay. I'm fine. Dude, algos are just totally ruining the market. The fact that you can have this massive dump of liquidity randomly at 10 a.m., lose 1.5 trillion it was from the market in a matter of like 40 minutes on no news at all. Like, what is going on? It makes it so scary. I look like I'm crying because I just put in eye drops right before the show. So I promise it's not market related. But it's fascinating. It's also, I think, largely unprecedented because the more volatility is as a result, partially by all of this extra liquidity that we have in the markets, right? Like, I don't think it's going to get any better. I think it's going to just keep getting crazier and crazier. And that's scary because you're getting massive sell-offs, it cuts both ways. You're getting massive rallies as well. That's across different sectors, across different verticals. It's just completely uncorrelated. Like I'm seeing, the AI company gets sold off with the traditional, player all in one, and nothing makes sense anymore, man. It's just like these massive algo firms, like the Renaissances of the world, run the market, and we're just living in it, like we're just a part of their whole thing.
Well.
Yeah, I went on the wrong fucking link.
How are you doing, Steve? It's all right. We already forgive you. The sins are forgiven.
Sorry.
How are you doing? How are you holding up?
I'm holding up just great. How about you?
I'm buying some dips here and there, trying to take advantage of the costs rather than I'm looking at it as Black Friday here. I'm buying things that I like at prices that I've not seen in the last little bit, especially in the high beta names that we cover often. Some of these names are down 20, 30, 40%, some of these names. So although the grander market is only down a few percentage points, some of these names in particular are down a lot from their highs.
I became a shareholder of a company today for the first time in my life.
Okay, it's either Hood, Nebius, CoreWeave.
Keep guessing.
You know what it is?
Yeah.
What does Steve want?
$1 million question.
VG?
No.
VG was a good guess.
Oh,
Grab?
Somebody in the chat got it.
Was it Grab?
No.
Microsoft? No, he's had to like
It was Microsoft.
It was.
Oh, I saw that and I was just like, man, no, there's not a chance he doesn't already own Microsoft.
Yep, I actually bought more BMNR today, and I became a first-time owner of Microsoft.
Wow. Okay. Well, do you care to explain? I mean, everyone knows Microsoft, but what's
what's the stock? What's the ticker symbol? I don't think I've ever heard of this one.
Yeah.
You do, Steve.
It is trading at such a low valuation, I could not pass up the opportunity. I said under 490 was an area I would get interested. And when it went under 480, I pulled the trigger with a starter position. And I'm planning on adding. When I think about the next 5 to 10 years, I think Alphabet, Amazon, Microsoft, and Meta are going to do very well. I already own the other three. It's time to own Microsoft.
Jeez. From 550 to 480.
Yeah. I got
Crazy
it. I
month.
think I got it like 574 or something like that. Sorry, 474.
I paid a premium.
Yeah.
When something's good, you pay a premium.
Yeah.
No, that's sort of the venture that I've been on lately is like what Noto said, a flight to quality. I've been stealing that quote a lot. I don't think this is the time where I want to buy the Open Door and Oklo and IonQ dips and Better Homes dips. I'm not buying those.
Nebius dips.
Yeah, but that is not even remotely the same, dude. That's not even oh man, that's one of your biggest positions. It makes me want to go crazy.
I'm not saying it's a shit company. I'm just saying it's a high beta name.
Yeah, but I'm not talking about high beta. I'm talking about business models that are not proven. It can be small names, they can be high beta, but that doesn't change. I know Nebius's business. I'm a big believer in artificial intelligence. I'm a big believer in cloud. That I actually don't think is as speculative as
especially
Open
with
Door,
Jen's
for example.
comments.
I
Sorry?
actually want to say thank you to Roy
Oh,
because Roy supported my rant on X the other day where I called out every bear on AI with a dissertation of over 2,000 words.
Dude, that went viral. That went fully viral.
Another one's coming this weekend, by the way.
nice.
Have you
Yeah.
seen Tevis's tweets lately?
Been
It's
doing
just-
well.
Yeah, Tevis has got jokes, man.
Just memes.
Did you
The
see how many
red.
likes he got on his red therapy?
Pull that up. Pull it up.
Wait,
That
but
was
I want
pretty
Steve to
funny.
guess.
I don't know if that one was funnier than the freaking bat signal with Sydney Sweeney, but
Hell yeah.
Did you see how many likes that red therapy one got?
I did. It was hilarious.
This tweet from Tevis got 33,000 likes.
Yeah, dude.
Oh my gosh, bro.
It was
I think
amazing.
X just started a new account called Bangers. I don't know if you've seen that. They are going to like retweet
Bangers.
like that needed to be on there.
Throw
Yeah.
up the Sydney Sweeney bat signal. That one's funnier. Dude, I swear, like a broken clock's right twice a day,
1.2K. This is crazy. But
That was Gemini for you.
Hmm.
I freaking love the new Nano Banana model, man. It's so good. It's so
Nano
good.
Banana is freaking crazy.
It's so good.
it's doing video now, right?
I
Nano
haven't
Banana
tried-
video.
I haven't tried the video. I've just been doing photos. It's like hyper realistic. It's really good.
Yeah. It's pretty crazy. I have not messed around too much with the
Did you
image
see-
generation stuff.
Are you still on my profile, Tanner? Go to one of my latest posts.
You didn't even let me answer, but I can go back.
I want to show you this. I retweeted it. I said time to go all in on Google. But like click on that post here, Alberto.
Bro, I'm just
Just grabbing a drink.
just looking at the
No. But look at that's a comment. Look at the main thread.
wow.
How wild is that? Just give it coordinates and a time of day.
Crazy.
Is that
That's insane.
and this is it? These are the actual coordinates?
Yeah. Like people are giving it just random. I saw one that gave it the coordinates of the Taj Mahal and just threw that up. It's crazy, man.
And y'all think your job is safe. Come on. No, I'm kidding. That being said, there's been a lot of commentary on Google. During this massive meltdown, Microsoft selling off, Meta's selling off, Nvidia posted its best earnings of all time. That's not 100% certain. I mean, it's pretty crazy when they were growing at 270%, but amazing earnings. And Google's untouched, $300 stock. Is this almost looking frothy compared to the other Mag 7 names and look like one of the more expensive choices now? Are you still adding to it at this price? Roy, I don't know if you're in this name. Would you consider buying now that Buffett's in?
No, I mean, I don't follow super investors. That's not my style. And I think, nobody should follow anybody into a trade either. I mean, you can, but you need to develop your own conviction. So that doesn't really change anything for me. Now, with Google, I've always been bullish.
Are you suggesting that I shouldn't have followed Tevis into Nebius?
Maybe Tevis, but
You follow some super investors.
Yeah.
I'm not
Canadian.
investor and never followed Tevis, man. It's a fast track way to losing all your money. Case in point, PM&R.
But yeah, I mean, it's Google's well positioned. Search is not deteriorating as fast as I expected. A lot of it is just it's hard to change when that's all you've been doing. So a lot of people are not going to shift away for a while. So I think the market realizes that Gemini is doing really, really well. So they're well positioned. But I'm not going in, no.
Steve, you got any commentary on that Google comment?
Yeah. If you're paying,
You muted yourself.
no bueno. So Alphabet's actually still relatively inexpensive, in my opinion. And I had said around 295 was fair value for it when it was at 170, 180. It hit it, and it still looks cheap on a forward basis. And I still don't think this is an expensive market, as I've been saying for the past couple of weeks. This sell-off, I mean, I'm sorry, clicked around the wrong things. Nvidia trading at less than 20 times forward earnings is insane. Meta trading at less than 18 times is insane.
You're muting yourself. I think you're unplugging the cord on your mic because that'll automatically put you into mute.
You muted me.
My hands are here.
My hands are here. Right
I know,
now.
so it's probably it's a cord issue. It's
not a cord issue. The cord's nowhere near me.
Okay, go ahead.
So Meta and Nvidia under 20 times, Alphabet under 25 times, Microsoft under 22 times. This is not expensive. These are the greatest companies in the market, biggest balance sheets, biggest cash flows. Microsoft is doing over 140 billion in cash from operations. And people want to act like the sky is falling. These companies are trading at great valuations. I'd argue that if you want to put Apple at 30 times and Walmart at 32 times, all of these other companies should be at the same valuation, if not bigger, because they deserve bigger multiples than those two companies. I mean, putting Nvidia and Meta under Coca-Cola on a forward basis, who are we kidding here? I mean, shit, Meta is trading under Coca-Cola this year's earnings, not even on a forward basis. Like, this market doesn't make sense right now.
Yeah, Meta's absolutely the best value, like the safest bet on that list. Lowest PE and 28% growth. Like, it's I mean, Nvidia is like, if you want to chase the high growth play, especially after their earnings, I was really impressed with the guidance that they're putting up and the commentary. But I really want to get into a position in Meta at some point soon.
How about this one, Tevis? The street took up 2027 EPS on Nvidia from $8.09 to $8.63 to $9.43 yesterday freaking afternoon.
Yeah, it's huge.
It's incredible.
It's crazy.
Now, I would even say, like, the bears on Nvidia that say, hey, you know what, this might be a build out cycle. That might be true, right? And so I understand some skepticism on, like, okay, well, maybe this is not the easiest purchase, or there's key person risk if something happens to Jensen, where do we even know who's running Coca-Cola? Like, I mean, like anyone can go and sell the soft drinks that they've been selling
Sugar
Forever.
water.
But I would venture to bet that Facebook and Instagram is probably more of a recurring, faster growing total addressable market, and just as much, not a consumable, but a recurring product than Coca-Cola. I actually would venture to bet that soft drinks and everything as a total addressable market is going down. I've really been on the belief that there is a health kick across country. Like I was going to say in America, but I honestly think it's a global situation.
Not in my household.
It's just one state, the 51st state.
Roy, you've been seeing it too. I've been on this train for a bit.
Yeah, I have some basically some people that are in the industry, in the space, like in health side. I don't go into too many details, that have been seeing that, and it's interesting. It's not what I expected. So,
and I don't mean that people don't eat desserts or whatever. It's just like Celsius and Alani would not even have appeared if there wasn't a health kick. Like the whole idea of what made those drinks and Poppy and all of those drinks is that there are healthy alternatives to Coca-Cola, right?
Mhm.
And if I'm not mistaken, Poppy got acquired by Pepsi or something like this. Like even those brands are aware that it's going in that direction. So
Yeah, but like to compare it to Meta is just a crazy. Crazy.
well, no. These are companies that make profit. You can compare any business. I don't agree with that. You have to look at total addressable market, what their future prospects are, and if those businesses are recurring in nature. Are their expenses growing? What's the disruption risks? I think that Coca-Cola is more expensive than Meta because people suggest that Coca-Cola will never be replaced. And I think they have a higher chance of being replaced than Meta does. Meta's going nowhere. Multiple billions of people are using their apps every single day.
I think both of them don't have a chance of really being replaced.
But one is more expensive than the other by a large margin.
And one has less of a innovation call option, let's call it, right?
just wait till they tokenize Coke.
Yeah, Coke on the blockchain.
They are in like, I think that's what Celsius and Poppy and Bubbly, and those are innovations on those sugar drinks. It just doesn't feel like innovation. No, am I crazy? Maybe I'm wrong. It is not. It's definitely not my space.
I just feel like software is just so much easier to see, like to massively scale innovation, because you already have the hardware network infrastructure already built out through smartphones and the internet and the laptops, and it's just like it's so much easier to reach this like critical mass. Like you saw how quickly OpenAI scaled. There's no physical product in the world that can scale to that same level.
Yeah. Yep. You're paying a lot. What's the growth of Coca-Cola, by the way? What's their year-over-year growth?
Can we guess?
Yep.
7%.
I was going to say 6.
Roy?
4.
I'll bring it up
Why don't you guess, Steve?
because I already know what it is.
You don't know what it is.
So then don't bring it up. Just tell us.
Yeah.
It's 3.76%.
Well, you got there. Matt is going crazy right now, gifting 5 memberships to Steven Fiorillo, 5 to Tevis.
Look at this.
That's why they
guy.
call him Matt Money.
I'm so jealous. All of them freaking went out to dinner the other night.
It looked nice.
It looked
It looked
really nice. It looked really nice.
Who's all of them?
Dougie, Matt
TJ,
Money.
Cool.
Who was it? TJ.
In Texas?
I think Michelle went.
In Houston, yeah.
Nice.
And I was kind of invited almost as a tag along, but yeah.
So this is Coca-Cola.
5 gifted Crossroad memberships.
Whoa.
He's not going to gift you 5 memberships, Tanner. Don't worry.
Honestly, that's okay.
Matty Money.
But can you zoom in a little bit?
Yes, I can. Sorry, I was looking at my phone. Apologize.
So this is what they're expecting for growth.
For 2025, yes.
3.76%.
On EPS and on revenue, it's even less.
He did gift the 5.
It's a good
Matt,
man.
thank you, brother.
He-
Seriously, that's crazy. 20 gifted subs
it's a good
across
man.
the board. Use the money to buy Rocket Lab. I will do that.
So I don't think, probably any of us are really, maybe Steve, are interested in Coke. But, I like the analogy and everything, but overall markets in macro, like, is this a time, like, are you guys, I think that I know the answer. You guys are looking at this more as an opportunity to buy the dip in names, but is there ever a point, and what would you look for when you would want to be a little bit more defensive?
I mean, I think, Roy, you do the same thing as me, more or less. I mean, I buy the S&P every 2 weeks. So,
I'm not right now.
oh, really? I thought you
No.
did.
No, I have a large chunk that I basically never look at that's S&P 500 related ETFs. So that allows me to be a little bit more aggressive.
Yeah, I mean, I've been putting in to the S&P every 2 weeks for a long time. That allows me to be very defensive because look, that's, and I explained this other night. If you every 100 grand that you have in the S&P, you have 5% down, you're down 5 grand. You still got 95 out of that 100. So when some of these companies are losing 30, 40, 50%, instead of being down 30, 40, 50 grand, you're down 5 grand. It's not nearly, look at you, Tanner. It's
Thank you,
not
Matt.
nearly as devastating. And I think people who diversify into big ETFs that have a wide bandwidth don't get hit as hard.
This is the time where I would absolutely be selling the S&P. Like
Why would you sell-
100,000%, so that I could buy the dips on these smaller.
Yeah, he's
like,
going into the higher conviction names.
like
No,
the S&P is
you
the
put your
piggy
other
bank,
money
baby.
in the high conviction. S&P is
Nah,
the
bro,
base.
you got to break the piggy bank when you want to buy something. I just like, for me, I would love to buy more Meta. I would love to buy more Nebius. I would love to buy so many, even SoFi at like $24. Are you kidding me? I would love to buy that. I don't have the money to do it. I'm like maxed out on like what I deem to be a healthy amount of margin, and that's like, I don't want to go even riskier than that. I don't have the money.
This is why
If-
you and
if
I
I-
are not allowed to go to the casino together.
If I had, it would be a dangerous night for the casino, my friend, because we'd hit the craps tables and you'd go all like doing the math on
Oh,
it.
Rain Man? Yes.
Yeah, you just, yeah, okay.
I'm actually studying Baccarat now.
My point was, thank you. We got Travis, Ron, and Lori on my point, Steve, is that, like, dude, I don't have the money to do it. I would love to do it, and I think all of us have the same level of conviction, more or less. Dude, if I had a lion's share of my cash in the S&P 500, I don't understand. You own a lot of Meta, right?
Yep.
Why wouldn't you buy more? Why would you put money
I want to
every
buy more.
week in the
But look,
S&P?
I am a much different type of investor. I have baskets of capital for different things. And
you're at a different stage in life. That's really important.
yeah, I do think, because I think I'm the oldest one on the stream.
I'm older than you.
Are you older than me, Roy?
45.
You're just a little old. We're roughly the same age. So, I mean, look, I think when I was your age, Tavis, I would have thought the same. But I'm glad that I've been putting in for a long time the bi-weekly allocation to the S&P, because I've also allocated toward individual stocks also outside of that. But that allows me to not feel pain, and also it's a hedge against myself in case I screw up, type thing.
Sure, man, but like, I'm not saying you pull out of that S&P fund permanently. I'm saying you do that. You borrow, almost like you're borrowing against your piggy bank or your retirement fund, your S&P,
No,
and
the
then you're
piggy
going to
bank
pay
is,
it back
the
over
piggy bank
time.
is cash. Don't look at the S&P as a piggy bank. The
Honestly,
piggy bank is
I
cash.
actually don't mind the way that Tevis is structuring it. Makes, if you do look at your S&P almost like that's your stability, rather than going into margin, you lower your
Right.
stability to buy into high conviction, high return names
Yeah, but that's the
when
difference.
they're
I would never use
extremely
margin.
low.
I would just put more cash in. Like, I would
Okay,
never
well,
use margin.
Not everyone's just made out of cash.
Exactly. We don't have endless fountains of money.
Yeah, neither do I, but you guys have cash laying around.
So I actually agree with Steve here, but again, I'm in a different stage, a little bit older. It's basically the idea that if you have life-changing money or like everything in your retirement is set and on track, it's okay to take some wins and be a little bit more defensive. And so I'm like, our retirement is looking like it's going to be really nice and really good. And I will be more defensive as a result of that. Like um, if we were not in this place, then I would be more aggressive. And so that's why, like I shifted away from Nebius, for instance, into Nvidia, because I'm like, okay, it's still plenty of, risk and opportunity there with Nvidia, but it's nothing compared to Nebius. A Nebius will probably outperform it, but I'm okay with that.
Yeah, well, I mean, that's the crux of what we're chatting about, right? It's like, okay, what is two questions? First question, Steve, what is your confidence that this dip is going to continue dipping for the next month? And don't answer, put that to the side. If you're bullish that we're going to rebound, right? If you think we're going to keep dipping, keep money in S&P. I'm drawing a little mind map for you. If you think we're going to rebound, then the second question is, what do you think is going to rebound harder, Meta or the S&P? And if you think Meta is going to rebound harder, right? So if you think S&P, then the mind map ends. If you think Meta, here's the third question. It's like, okay, cool. If you were to pull out X dollars from the S&P and put it into Meta right now, because you think that A, we're going to bounce, and B, Meta is going to bounce harder than S&P, how long would you want to hold Meta before you start paying yourself back in your S&P fund? And once you have those three questions, you can make a risk-adjusted decision around whether you want to keep it in the S&P versus in Meta. That's at least how I would think about it.
And I understand what you're saying, and you're not wrong in what you're saying, because a lot of people would go with what you can generate the largest ROI on. So if you think you're getting better ROI on your money, being in Meta or Amazon, why would you be in the S&P? I'm with you, and I completely understand where you're going with that. It's more of a personal preference with me that for the long haul, based on how much I'm putting into the S&P, when I retire, none of my other stuff matters. So I like having that hedge and stability, knowing that no matter what I do, no matter what I want to take a chance on, if I screw up, I am still going to be set for my entire retirement.
Yeah.
So it's more of that. Like everything I do on the side, whether it's crypto, you think about it, outside of the S&P and outside of ETFs, I have tranches for income producing assets, growth, high risk, so, and other plays. So it's more, if all that shit goes to zero, I still have the S&P to fall back on. So it's more a hedge against my stupidity. That's really what it is.
And if the S&P 500 implodes, we have bigger problems.
We have way bigger problems than that. Yeah.
Well, okay, so I understand that argument. Here would be my counter. As a percentage of the total S&P composition, the Mag 7 or the hyperscalers make up a stupid large amount.
34%,
So if
something like that.
Yeah, like 39% or 34, whatever, 34%, let's say. If Meta were to go to zero, yes, you would lose all your, first of all, like, cool. If Meta were to go to zero, something drastic has happened. You would lose all your money in Meta, but even if you were in the S&P, I guarantee you would lose like at least half of your money, if not more, because of the panic, the FUD, and all this other stuff if Meta actually were to go to zero. So it's like, first of all, nobody here really believes that Meta is ever going to go to zero. And secondly, even if that were to happen, because the S&P has such a massive concentration in those 5-6 names, it's still going to get hurt insanely hard. So you kind of de-risk to some degree to take that leap.
I think that especially a name like Meta, there is this weird concern that something could happen, even though Mark Zuckerberg is young. There is key man risk there. The stock wouldn't go to zero, but it would take a hit that day, a big one. Double-digit downturn. I don't know what that percentage would be, but
And look, I've ridden Meta down to 88 and bought more under 100 and brought my cost basis actually up. Like I've taken those trips. I took that trip with Amazon in 2022 where I got cut by 55, 60%. Like I've taken all those trips and it doesn't scare me one bit. And part of the reason why is because of the ETFs. And I will tell you, Tevis, there is a name that's outside of my traditional risk tolerance that's getting very interesting. That's right up your alley. CoreWeave.
UXO? Oh, well, dude, I already own Nebius.
CoreWeave, when I ran the numbers and I started looking at everything and I looked at the amount of cash they have on hand versus what their negative net income is and what their run rate is versus when they're expected to start generating a profit. And it looks very interesting compared to the level of debt they have. Now, the only factor that I can't factor in is what that debt is going to balloon to by the end of next year. But even if I say it's going to go up by 50%, it still looks interesting with how much it's fallen for a 5 to 10 year play. And I'm thinking about starting a position next week or the week after. I haven't made up my mind yet.
yeah, it's hard to hate a company that the biggest company in the world said they're going to backstop any miss that they potentially have. So like they are guaranteed to win, over the next little bit. So I've got no hate in CoreWeave at all.
The numbers look very interesting. Have you guys looked at the EPS expectations? They're expected to get profitable within the next year and a half.
Yeah, I mean, cloud and AI cloud especially is a very profitable business. It's just, people don't want to take the risk on the non-profitable names right now, and so that's selling off a little bit. But
yeah, when I look at where this went, it's gone from 187 to 71, and they're expected to do $2.22 of EPS in 27. It's trading at 32 times 2027 earnings.
What's so funny to me, is this CoreWeave here?
Yeah.
Yeah. What's so funny to me is that the big concern about artificial intelligence is that maybe the build out is going to finish. We don't know how long that's going to be. And then we go into maintenance mode. But no one is ever suggesting that cloud growth is going to stop. And those are annual recurring payments.
And there's $755 billion of backlog from just the 3 hyperscalers of cloud infrastructure.
Yeah. Yeah. So they're going to have massive growth.
Yeah.
I'm not anti that. Someone in the chat said Nebius is at this certain multiple, and that seems high. It's like, how do you even put a multiple on a company growing at 700% year-over-year growth? Like that's not
Did
even.
you guys catch All In today?
No.
They debunked Burry's whole depreciation thing. I don't even need my account to do it anymore for me. Like they freaking completely debunked it. They got out the gap rules. Freeberg and Chamath broke down the depreciation schedule. It was beautiful. I highly suggest, they have it bookmarked. I highly suggest everybody who is interested in AI and Nvidia to watch that segment. I mean, Chamath said at one point, why are we still talking about Burry? He doesn't deserve to get mentioned. He's not good at what he does. And they basically called him a has-been. I mean, it was pretty interesting. It was great.
I mean, he
tried to argue
the definition of a has-been.
Didn't Burry try to argue SBC after the depreciation thing got debunked on X? I just found that as like the biggest desperation Hail Mary.
SBC on what? On Nvidia?
Yeah.
Yeah.
It stayed flat quarter over quarter and revenue skyrocketed. So it went down to like 2.9% of revenue, which is like historically low versus the Mag 7s.
Dude, just get him on your panel, Tanner.
How about this?
I'm going to get Jensen while I'm at it.
A company that's $4.5 trillion that just grew their revenue year over year by 63%. I think the senior management team and everybody who's getting shares are worth the shares. Just saying.
Yes, and he's been going back to, he went back to 2018, which I'm like, okay, Nvidia in 2018 is a very different company than Nvidia 2020, well, their fiscal 2026, our 2025. They're just living in the future. Like Tanner said, stock float is flat. His biggest argument around this was just like, oh, look at how inefficient they've been with the capital. Well, they have $60 billion on the balance sheet, and they're having to get increasingly creative with how to use it. So they have a too much cash problem. Great problem to have. But yeah, this is just Burry grasping at straws, and he's being just utterly ridiculous. So, and like, what's the other thing too? Like with the Burry argument, he had a previous argument where he talked about depreciation. I know Tevis, you and I talked about this on Bootleg Weekly, where the depreciation is on compute has been revised up. What this basically means, Burry is saying, hey, this is a great way where companies hide weakness, and so they will revise those depreciation estimates up. But there was two different arguments that Jensen specifically put. I'm sure he's aware of. What's that?
They called him out in the earning. I mean, not him like by name, but like his argument.
Oh yeah. And thank you, Calcum. Appreciate you. But like one of those was the A100s. Like 6 years ago, they rolled out A100s, which are still being used in full capacity. That's well past expected depreciation. Software improvements, CUDA, all of that. There's reasons for it. There are a couple of, there's one other like very clear reference too, but it's just like Burry's thesis is based on things that I don't think he understands at all. Like this is not a space or an industry that he gets. And I think the biggest thing that he can argue is like maybe they weren't as efficient as they could have been, or like valuation, and that's it. And that's a really weak thesis.
Yeah, I think that's what Steven was bringing up, though. That's what Chamath and all them said. Like, this is a joke.
It's also silly because
everything Roy just said.
Let's assume that the depreciation schedule that Burry has is accurate, and everybody runs out in 3 years versus 6 years. Well, that's bullish for Nvidia, right? They have to re-up more often. So, like, why wouldn't you short the hyperscalers? Why would you short Nvidia? Like, Nvidia is going to do more business if they depreciate in 3 years versus in 6 years.
That's a funny thought. It's not them it's not Nvidia that is the one that's being fraudulent with their numbers.
Yeah.
But honestly, you should the depreciation thing, honestly, the one thing that I'll defend Burry on, that part's never been like he didn't discover that. That was a bear case for a long time. Is that but then you look to Nebius and their depreciation schedule is extremely conservative. I think there's like three years or something like this. Like they've been really conservative on that number, which actually hurts EPS. But
no, that's aggressive.
Because you're seeing the same thing.
Conservative would be 5 years.
No. What I think we are saying the same thing. What I'm saying is it actually hurts their earnings to do that.
It does.
Yeah. So they are being conservative on their EPS by depreciating faster. Sorry, we were talking just in different directions. But that should be a level of comfort, knowing that they have a really low level of or low schedule of depreciation, because then if it lasts anything longer than that, they're actually benefiting from scheduling that depreciation much earlier. So they're making it harder for themselves to grow.
Here's my problem. The bears are trying to stick to anything that'll stick. They have no argument. They've had no argument. And right now, the biggest headwind is not depreciation. It's nothing with these companies. It's not how much they're spending. It's actually the Fed and unemployment. And they're talking about the wrong things. And even the Fed and the unemployment is not going to impact Nvidia or the hyperscalers. It's going to impact a lot of other companies, but not those companies.
Can we quickly? Oh, Roy, what do you have here? Is this his schedule?
If we wanted to throw that up, yeah, this is the depreciation and its shift. You can see, but if there's actual reason to expect depreciation has been less aggressive, like we've seen with Nvidia, it makes sense. So,
what I heard from someone in the field, they told me that inference is a lot less stress on the GPUs, so they do actually last longer. So as we went from training to inference, that is what's lengthening the life scale of this, or the lifespan of the GPUs?
The big argument is not when they break, it's when they stop generating revenue. And if they're still able to generate tokens, they're still able to generate revenue. And that's the big argument with the depreciation.
Do you think Nvidia will be the next Cisco?
No, it's how many freaking times do I have to go through this?
Go ahead. Also, the multiple on Cisco whenever the bubble popped was 5 times higher, 6 times higher than where we are today. It's not even remotely close.
It's not even remote. The S&P is not even remotely close to where it was trading in 2000 and 2000. Just please take 10 minutes, because it's going to take you 10 minutes to probably read my post. I'm pretty sure Roy read the whole thing.
I did.
I don't want to explain because it's going to bore half the people that are watching on our channels. Just go read my post, and I think that you'll find the answer to your question.
It's a good way to get readers over to your thing, eh? It's going to bore everyone to sleep.
No, but I'm serious. Like, I don't think people want to hear me give a 5 or 7 minute explanation about this.
I'll give like a 20-second one. Is like, okay,
Yeah.
who would know more of whether this is legitimate or not? The CEOs of the massive hyperscalers, which really gain nothing from saying, hey, we're spending and we're going to spend even more on CapEx, or the bears. There's a lot more to it than that, but that's it.
That cuts both ways, dude. Because, like, yes, they would know more, but if Burry is accusing them of some type of malpractice in terms of like nefariously adjusting their numbers to like financially engineer results, then you could make the argument to say, like, who would be more incentivized for these numbers to be the way that they are, Burry or the actual CEOs? So I could see how somebody could spin it either way.
Yeah, no, it is a real concern. It's just like Nvidia already cleared it up. The A100s are still in use and at full capacity.
Now, I do believe that Nvidia would be like the voice of reason in this whole thing, because like Nvidia is just like, hey, this is what we're seeing from a demand perspective. And Nvidia is actually incentivized to say that depreciation is actually faster because they sell more. But for the fact that Nvidia is being honest, then that's the voice that I trust the most, not Burry and not the CEOs of the hyperscalers. I actually trust Nvidia as the supplier of all this.
Yeah, that's the thing. Like, this is so dissimilar from the dot-com bubble, where companies that were pre-revenue or like way pre-profitability, there were some profitability too, were just talking about future sales, future growth, interest, opportunities, and oftentimes there was no business model at all. Versus like here, these are some of the most deeply profitable businesses in the world, and then they're saying things that like would be the not a bullish narrative for them personally. So the hyperscaler saying we're going to spend even more just because this is really important. That's a bearish thing, and you would not expect them to be like lying or anything about that. Now you could say maybe depreciation, but again, yeah, Jensen, the most bullish thing you could say is like, yeah, these guys got to replace their chips every 2 years, so we're going to do even better. Well, he said the opposite. So it's like, are they lying to sound more bearish? That makes absolutely
yeah. Well, honestly, that does make sense, because he needs to make sure that the bubble doesn't pop. Like I honestly realized he was trying to pump Meta in his call, because if the shareholders unite and they bring the pitchforks to Zuck and say, we don't care about AGI, we want returns now.
Yeah.
Then he goes, all right, guys, I'm outvoted here.
Yeah.
That's really fair.
Brad Gerstner, sharpen your pencil. This is your
yeah,
time.
right. Like, you do not want that. Luckily, Gerstner is very much on the AI train, very much on the CapEx train. He is. He even talked about it in the last BG Squared podcast, where he just said, like, we're spending tens of thousands of hours on this. We are double checking, triple checking. This is so real. I'm not spending tens of thousands of hours on it. I'm just seeing what Jensen's putting out. Well, I don't want to downplay, what we do here, but
I mean, you're just one person, right? So like,
yeah,
they have
that's all I was trying to say.
Teams of people who went to school for this, who do this full time, and
yeah.
So do we want to talk about the earnings of the company that we all have that's struggling right now? For our stock
BM&R?
You bought Nvidia?
No, BM&R.
Before
I
we
do. I wanted
transition-
to touch on a quick question. I'm just trying to find the freaking. Oh, okay. I remember. It's CFO commentary. I was wondering where it was.
While you do that, Nvidia looks very cheap. It is the second cheapest stock in the Mag 7, and I'm currently trending on Seeking Alpha. Yay!
There you go.
Good rider. You're a good
There you
rider.
go.
There we go.
There was this question. He posed it to Tevis, but Tevis, if I can have a shot at this as well. Jensen, did Jensen address the inventory number going way up? This was something that I think Meet Kevin sort of addressed and caught a lot of attention on X, where he pointed to the 10Q having a massive spike up in their inventory. And he was saying, okay, well, are the cloud GPUs sold out or are they not sold out? Like, why is your inventory spiking up so much year over year? That was dressed on the front page of their press release. Like, I'm not even in the 10Q. This is like just the regular CFO commentary. Inventory was 19.8 billion, up from 15 billion quarter over quarter, and total supply-related commitments were 50.3 billion. We are ordering to secure long lead time components to meet the demand for Blackwell and support future architecture ramps. They are fully aware, unlike, many companies that have ran into these problems where they don't realize the demand for their next product and they get bogged down. They saw what happened going from Hopper to Blackwell, and going from Blackwell to Vera Rubin is going to be levels of demand that is unprecedented. They're building now, so then the ramp will be hopefully a good stream of customers actually getting their products out on time.
And I want to address one thing. Can you bring up my screen?
Yeah.
Is it piggybacks off of what you just said? People were trying to make the argument about accounts receivable, which I have highlighted here. I'll take the highlight off so you can see it.
Zoom.
And zoom in.
Yeah, please.
Sure.
Yeah.
So
Also collapse the sidebar on that little arrow beside the logo. Yeah, there you go.
they're currently at 33.39 billion, which is up around 5 billion quarter over quarter and almost double year over year. But what people have to keep in mind, and I'm sure Tevis and Roy will attest to this, companies negotiate different net terms. Okay. So while, let's just say, industry standard from what I've seen with contracts is net 30. That's just standard terms. If you're good at negotiating, you can negotiate net 45, net 60. I've negotiated net 90 in some instances. And what that means is from the day that you get the invoice, you have up until that period to pay that invoice. You don't have to pay it over a 15-day period or a 30-day period. It depends on what your terms are. Now, in some cases, there's net 15 terms. But because of how big Microsoft is, how big Meta is, they can negotiate good terms because what's NVIDIA going to do? Say no? So, and I'm not saying they're the ones that have shorter net terms or longer, but NVIDIA may be giving CoreWeaver, another company, longer net terms. But that's all that is. So when you see that backlog, that's not because people aren't paying them. They're at that money. It's because of the net term schedule on when they get paid. That's all that is.
If you're NVIDIA, so I wanted to highlight the net term. Like, basically, here's how I got to this comment. I thought about net terms, and I thought about the negotiating power that these companies have or don't have with NVIDIA because the demand is so incredibly high. And then I thought about the concentration that NVIDIA has around 4 customers making up like a massive 10, or you should know the percentage. What is the percentage of their total sales, like the top 4?
Of their total data center revenue?
Yeah, like NVIDIA has an insane concentration in terms of like 4 customers doing massive business with NVIDIA. And then
Yeah, I don't know if I know the number off the top of my head.
I wonder, like, if it has Jensen commented on this, whether it's just easier for them to just concentrate their business with a few major players, like if
No, it's just they make up for the high majority of the AI spend. It's just that they're selling to every possible customer.
Right. But what I'm asking is, does Nvidia basically command a higher premium if they sell to other customers that might not get like a wholesale deal or because of the concentration of buying in bulk? Or does Nvidia not want the hassle? And so they're like, okay, we'll sell everything to, Tesla and Meta and Microsoft or whatever. And we don't like to deal with the smaller players as much. Like, where would you say they sit on that pendulum?
I'm actually not sure. I've definitely have heard of some things with Jensen, like Elon paying a lot for almost private.
Can you throw up Jason Wright's comment? Jason Wang's comment. He just answers it. Yeah. So for direct customers with sales greater than 10% of total revenue included, 1 at 22, customer B at 15, customer C at 13, and customer D at 11. That's a massive percentage of concentration.
Yeah.
Right. So I don't know what their preference is. Like, is Nvidia leaning into that concentration, or is Nvidia like leaning away from it? And even in spite of that, they still have that concentration. If that makes sense.
I mean, I look at it, and some of the companies that have even much higher concentration for their lead customers. So when you look at economies of scale, and there's only so many hyperscalers, there's only one OpenAI, there's only one Anthropic, you're going to have that. So just kind of the nature of things.
Yeah, but I would wager to say the company you're thinking of, Roy, is probably not a hardware seller.
Yeah, one of them is, but it's a tiny one. So.
Well, where I'm coming, and this is just a bias and maybe a misconception, but like as a hardware seller, like there's a lot more, that goes in, like a lot more cost of goods sold essentially that goes into delivering the end product. There's logistics, there's like the packaging, there's all this extra stuff that if you're selling software, it's just one checkout page essentially. So I would imagine that if I'm doing massive business as a hardware provider, I would much rather do it with one customer as opposed to 100 customers. But you lose out on the potential to charge more if you're doing it with one customer versus 100 customers. I don't know, maybe a little bit esoteric.
I get what you're saying. Little in the weeds. There was a question that I posed, which I thought was going to be more the direction that we were going to go down. This is the fintech frenzy, and then maybe we can jump into BM&R after. But both SoFi and Hood have been getting clobbered. Okay, Hood even more so. However, that has led us to, let me get the exact prices at close. SoFi at $25.19 and Hood at $107.30. What are you guys buying first at these prices? Hood from its highs has come off a little bit more than SoFi, but they still are over $100 a share, $96.5 billion market cap. How are we feeling whenever we look at those two names, trying to separate them?
I mean, they're my number one and number two positions, so I'm not really adding. But yeah, they're quite a bit more attractive than they were. Not obviously, same great companies, positioned very well. But yeah, number one, number two positions, only so much I can do there, unless it is a ridiculous, absolutely egregious buy, which cheap is not the same thing as that in my mind.
It's kind of fun. It's actually pretty split. I'm seeing a lot of Hood, and I'm also seeing a lot of SoFi. SoFi 100%, and then Hood easy. It is pretty split.
Yeah, and it just depends on, like, for me, like the time frame. If you're talking about 2 years, SoFi I think is the easier money. If you're talking about 10 years, I think Robinhood outperforms. But I think
however, I want you to interpret it the way that you would invest.
I'd be looking 10 years out, so I'd be buying Robinhood if I had to pick between the two of these. But, I like them both. So the reality is, if I didn't have a position here, I'd be buying both.
Tevi?
I mean, I think for me, I would probably be buying. Okay, so in my portfolio, Hood is my smallest position, And I've talked with Roy like so many times that I want to just increase that position. So I'd probably be buying Hood as like this is a good opportunity for me to increase that position. But the difference is like SoFi is 23% and Hood is like 1.5%. So it's massively different. Now, what I would say, and maybe food for thought for you guys as you guys think about this, how I want you to think about how you feel now with SoFi at 25 and Hood at what 103 or something,
107. Yeah.
107. And then I want you to try to think back to when these were on the way up and SoFi was at 25 and Hood was at 107. Because there's probably a discrepancy there. Before the drawdown started, and Hood was at 140s, it peaked, and SoFi peaked at what, 32? Like, you would have gotten FOMO probably more for Hood, even though it ran up way more over the course of the last 12 to 24 months.
Because on its way to 107, it was not in the S&P.
There you go. Yeah,
SoFi still isn't.
That's
and they might get in this year. Who knows?
Not this year, no.
It's a possibility.
Within the next 12 months.
No. Unless there's one there might be announced this year. They can't get in this year.
It's only like...
Oh, no, it's a 2-week delay. So I guess you're right. It's like a 1% chance that we... Next year, I think, is like 90% chance. So
there's really not that many larger names than SoFi that are going in. I think it's like 5 names or something like this.
Yeah, which means next year to me.
If you look maybe.
Because I mean, like, unless we're expecting to do something unprecedented where they get rid of a whole lot, and they've already done a little bit more recently.
Look, I answered and I said, hey, look, I would probably, in the case of my portfolio, it makes sense for me to just add to Hood at this point because I'm already so heavily concentrated in SoFi. What I will say is betting on the weather. Come on, guys. What is this?
It's optionality.
Bro, I don't know, man. It's so weird because they're going so wide.
They looked at their cohorts and they're like, man, a lot of meteorologists have been joining on our platform. We need to give them weather predictions.
It's just they're taking their platform so wide, man. Like you can get a credit card, you can get a bank account, you can get a brokerage, you can do crypto, you can, do predictions market, you can bet on the basketball game and bet on whether it's going to be sunny tomorrow. Like it's just so crazy.
I think they already have over 1,000 different predictions or something like that. Like 1,500 predictions is what they said on the quarter.
So crazy.
I think that'll open up to like I think that'll be 20,000 one day. And, there will probably be some level of interoperability between.
Yeah, somebody said it's Vegas on your phone.
Yeah.
It's crazy.
Well, it's like a true one-stop app.
Some people call it a gambling app. Some people call it a super app.
Yeah. And honestly, like it can kind of be both. So the weather thing, they're in part what Tanner said is absolutely accurate. Predictions market is there for those that have knowledge of that space and that want to make money that way. That's a great thing. Another tool, another option. Is that very niche? Yes, it is. It can also be used as a hedge too, by the way. I can think of, I have some friends that are farmers, haven't been in contact in a little while that I don't think they'd use this, but it'd be kind of a nice hedge, for them in their area. The other thing too is I think they want to avoid just doing sports, partly because of optics too, that as they go through these legal battles, they don't want to be just their sports gambling is like, no, look, predictions. It's much wider than sports. And that is technically true. So yeah, we'll have to see, but yeah, optics, I think is a chunk of it at least.
Whenever we start talking about SoFi, Steve powers down. He goes into low power mode until we start talking about the Mag 7 names again. Then he pops back and he goes, did you say AI?
Well, I just think AI is way more interesting right now than SoFi. Like we know everything that we're getting with SoFi until next quarter. Like there's not going to be anything else to talk about SoFi for a good month and a half. Unless we get another fireside chat.
Well, I do think that there's not much new. We did end up seeing SoFi's crypto Q&A. I don't know if you guys took a look at that. That was a waste of our day, whoever checked that out. However, they are definitely, like, and I'm not kidding, they are taking crypto super seriously. The homepage on SoFi right now will say, like, checking and savings and investing. And they want to make it say checking and savings, investing, and crypto. And those are the three options at the front. So seeing the interface was a little bit interesting, just because I think it highlights just how much of a push they're going into crypto. But I think it is interesting, Steve, going from a valuation of $32 down to $25 in the last couple of days. Maybe it's on a DCA schedule for you or something along these lines.
No.
All right.
Not at this level. I mean, when's the last time you bought SoFi?
I bought at $31.
Okay.
Yeah, that's the fun thing about the market is you can be terrible as far as the timing of buys. But if
Hey,
you're buying quality, unless you're just buying at absolutely like the worst, the .com peak or something. If it's a quality company, you'll be fine.
no, dude, it was before earnings. We were at $30.99 and we were watching it in after hours, and I put in my order to push it over the edge. So we went to 31.
It's better.
Okay.
Than,
You guys just aren't for the crew. I'm here for the team.
No,
I'm playing the team game.
You're kind of, and then like Tevis is like full port. He's like writing puts in the money and stuff.
Oh yeah.
Our DJ, I'm glad you're here.
Yeah.
All right, you guys want to, or do we want to do it in after hours?
Do it in after hours. Don't do it on this one.
All right, fine.
Because I already know what you're going to say, because we already talked about it. That's an after hours. Right?
Yeah. Okay. Got it. Sorry, guys. Steve won't let me say it. But sign up for after hours, I guess. That's
Yeah.
Steve,
Steve
you're
serenaded
really
us in a beautiful song last time.
Wait, what?
I didn't even post that episode. I'm gonna post it right after the show.
And I'm going to tease something in the after hours. I actually have a pretty big announcement I'm going to tease, because it's actually, the Milk Gang is going to appreciate it. So it's actually a big thing. And after Tevis goes, we're going to workshop a few things I just generated.
T-shirts.
You guys have no idea. It's actually big news. There's only 2 people that know. Oh, 4 people that know right now.
Oh, 6 people. Oh, no.
No, 4 people know at the moment.
Yeah, Steve's doing a striptease in the after hours.
That is not happening.
Okay, ladies and gentlemen, if you do want to join the after hours, you have to be subscribed and click the join button. It can be on any 4 of our channels, anything along these lines. It will be uploaded tomorrow if I'm on time. Sometimes I'm late. I got to be honest. It was pretty late. I think I uploaded it like on Sunday or something.
2 days ago, you uploaded it. 2 days.
Oh, no.
Yes.
I'm literally uploading it now, guys. So give it like 20, 30
2
minutes.
days ago.
See last week's.
You got to get them out on Saturday. We can't be waiting for you.
2 days ago was November 18th.
That's when you did it.
Yeah, it was November 18th.
Well, 3 days ago then, because it's 21st.
Yeah.
But yeah.
But
That's good.
these are the kind of people that I'm working with here.
Look.
You know what? We need our content.
All that means for the audience is that they're going to get 2 after hours shows this weekend. They're going to get 1 posted tonight, which is last week's, and they're going to get 1 posted.
That's only on your channel. Mine's already up.
Yeah, mine's already up.
And Roy's.
Roy's
I'm about to put it up.
All right.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time, and bye for now.
Goodbye for now.